The Federal Reserve's second round of quantitative easing is now in full swing. Chief strategist at Deutsche Bank, Marshall Gittler, spoke to me about some of the trades that are now benefiting.
Well, some of the trades that already did benefit were, first off, Treasury yields came down considerably, and equities went up, and I think a lot of the money probably flowed into emerging markets as well, especially the bond markets. Some of that has reversed in the last few weeks. In fact, people put on these trades in expectation and then actually took profits when it actually happened. I think these will benefit after we get through with some of the problems in Europe. If things calm down a bit in the next year, I think these will benefit again. I think perhaps Treasury yields might come down a little bit more, and particularly equities and other risky assets I think should be the ones that benefit, because that's one of the purposes of quantitative easing, to move people out of treasuries and into risky assets.
In terms of investment, where should investors be drawing their attention to at the moment?
Well, I think the most important thing is the different growth rates in the developed world versus the emerging markets world. I think the emerging markets are growing a lot faster, and they don't have a lot of the problems, particularly the debt problem, that the developed markets have. So I think that's going to be one of the keys going forward for investments.
So you think that emerging world could be the new destination for people looking for security?
Oh yes. I think, as unusual as it may seem, that they don't have a lot of the big problems that developed markets have. First off, their debt to GDP ratios are falling, not rising. Second of all, their demographics are improving, not worsening. They're young societies whose workforce is growing. They're not aging societies that have to support an aging workforce. So, and I think over for the next 5 to 10 years, this is really going to be in some ways safer than the developed markets. They also have obviously huge foreign exchange reserves too.
So in a nutshell, what do you think the future is in regards to economic conditions?
Well, I think this sort of bipolar world is going to continue for the next several years. Studies have shown that when countries go through banking crises, usually it's followed by a long period of slow growth. Also, because of the high levels of debt that these countries have to work off. That means the developed world is going to have relatively slow growth for the next few years. On the other hand, in the emerging markets, you have a virtuous circle of rising incomes leading to rising consumption, leading to better living conditions and more education. And so I think this sort of bipolar world where the developed world reaches a plateau for some time, but the emerging markets continue to blossom.
Okay, and Dukascopy will be trading with the Singapore dollar in a couple of months or so. But at the moment, it's continuing to lose steam against the US dollar. Do you think it will continue to do so further, or what do you think?
No, I'm quite optimistic about the Singapore dollar. The Monetary Authority of Singapore just recently widened the band and steepened it, meaning they expect more appreciation. And I think people are interested in the Asian currencies. I do expect China will revalue at some point, and that should mean Asian currencies as a whole benefit. The Singapore dollar is almost a little basket. Singapore dollar is traded against a basket of currencies, many of which are these other Asian currencies that will be appreciated. It should appreciate along with them.
All the interviews and videos from the Geneva Forex event can be found on Dukascopy TV. Goodbye for now.